Good weekend. I'm Epstein, and here we are on March 16th, Sunday, 2025. And this is your weekend edition where we're going to look at weekly charts and try to get a better feel for what they may offer in the market. Now, when you look behind me, it's a sea of green. I mean, silver was lower, but you got to look pretty hard for all these red numbers that you might have. Bonds were down a little, UUP down a fraction. But as you can see, it's just overwhelming to the upside. So we had a bounce. Is it a bottom in the market? Time will tell. But I think after a prolonged break, it's not uncommon that you get a bit of a bounce. But what's changing? Nothing. And my fear is that as we get closer and closer to the April 1st date, when Secretary of Commerce Lutnick will be giving to the president the retaliatory tariff numbers, we will see what happens. I can tell in my household, my wife loves New Zealand wines and Australian wines. The first thing was, how much are they going to get tariffed? So I had to go look it up. New Zealand has none in the U.S., and it's about 1% at Australia, 1.5% overall on U.S. goods. So they're not in the big firing line. But if you like New Zealand wines, I think they'll be okay. Let's take a look at the news we're going to get tomorrow in the market. You're going to get the Empire State Manufacturing Survey for March. That's at 7:30. At 7:30, advanced retail sales for February. At 9, we're going to get the National Association of Home Builders with their monthly market housing index. And then at 9, you'll also get January business inventory data. So we'll see that. We have earnings also coming out, as you can imagine. And of course, there'll be more confusion about so many of the different lawsuits going on with Doge and everything else that is taking place there. So it gets very, very interesting right now. So let's take a look at our first chart. And I'm going to continue with Devon Energy this time. I picked it up last week when I left, but as you know, I was gone 4 days, so I'd like to finish this up. And on Thursday, I'll pick up something new. And barring any illnesses, I'm here with you until at minimum midsummer before I take a few days off. But as you can see, the energy markets have been working lower. We have a pattern of a higher high. This is a swing line. And what a swing line does is you look at the current bar. Well, what we have here are weekly charts. So it's a weekly chart. You had a market that had a higher low than the prior one. Therefore, the bar is drawn to the upper side. There's 5 rules. I teach them in my charting course. You have a higher high, but an overall lower and low pattern. There is no trend at work. I then take a look at what I call the line in the sand, which is the 18-week moving average of closes. And as I look at the market right here, you can see that the market is underneath the red line. That defines bias for me. Also, when markets are under this number, when you rally up to them often, that's the number that you'll fight at. If you're above them and you break down, you'll often fight a battle like you did here for 3 weeks. It's a weekly chart at that number before it sets itself in. Got it? So use it that way and think of it in those terms. Let me come back here for a second. You also have the 100-week average and the 200-week average. They're all above the market. The market is in a downtrend pattern. Why? The shortest term average, the 18-week, is under the 100-week, and the 100's under the 200. Still in a bearish pattern. When we take a look at Bollinger Bands, which are an algorithm designed to keep the market trading within them 95% of the time, the market had been hitting the band. This was called running the band right through here, and then it came up, did the battle that I just told you about, fighting at the 18-week, did it again, still staying under it. Now, if this market can start clearing that 18-week and staying above it, maybe we can say the market's establishing a trade bottom, but not yet. Last but not least, the slow stochastics, a momentum indicator. And it's pretty much going sideways. So I'm going to say the market is void of a trend. The bias is down since it's under the 18-week average. Dutch Brothers, I've been looking for the market to pull back to the 18-week average. It's done so. So I check that off the box and go, okay, after the big run-up that the market had, up to the 90 level, you've pulled back to, believe it or not, 60. So the market has given up a third of the game. It's probably an area where the market starts looking for where the support is now. The momentum in the market is no longer in overbought territory. Neither of the numbers is under over a 70 level. Anything over 70 is overbought. You had been there, if you take a look with me, and when you lost the embedded reading, see this right here? Here the numbers are still over 80. When one of the numbers starts getting under that point, what you do is you're headed down, and here's where you go. You're come down, now I'm looking for, and it hit it, the 18-week average, again, off that theory that I gave you earlier, and still fighting right at that number. Netflix, it's the same type of thing. These markets got priced up, as you know, about a month ago, very dramatic, and they have since given it up. I thought that Netflix would fight a battle around 950. It's turned out to be 926 as the market kept coming down. I am not overly bearish this. It's still if you're going to want to own a streaming station, this probably is the number one choice. In MCHI, well, China's coming out with all kinds of plans that I'm just catching up and reading on. They came out over the weekend, and everything now is designed for the consumer to spend the savings that they have at home. And they're trying to figure that out. When you read the plan, I don't get any of the specifics. So I assume they have something in mind. I'm going to read all weekend long still. This is only 2 p.m. on Sunday, and I'll keep going with that. When we look at Home Depot, just coming apart. This market had been up, as you know, to the 430s, 440 area, and it's now down $100 from there. Again, is the consumer going to spend? What are they going to spend on? Spring building is right here. Is this normal for this time of year? Well, if you take a look at the February period here, and you and I go back over here, you had fallen into the Feb-March period last year too. And then it started picking up into the summertime. So I cannot say that this is something that is highly unusual. It fits into a degree with everything else. If I stepped here this was, by the way, 2023. If you come here, you did get a break into the April-May period and then took off. So I'm going to still look for that type of scenario overall. In Uber, I'm excited because I was in a Waymo cab in Phoenix over the 4 days that I was gone. And I am blown away with the technology that this offers. I cannot say enough good things. I think companies that hook up with this automated driving, I think their future is very bright. And Uber being the biggest for driving apps that you would call a cab with, I cannot imagine it's not going to be trying to do everything it can with every manufacturer that they can get their hands on to work deals. I like this long term. I think the pros are getting ready. I want to use a key word here, getting ready to begin the nibbling as early as this week in hitting this market here and just building positions from that on down. That's what I think is going to happen. In KRE, we have lower highs, lower lows, still bearish. The banking is scared. We don't know the slowdown in the economy. We know mortgage rates are falling, and the regional banks are very involved in that. So we have to see what's going to happen. But so far, it ain't very good. When you look at the industrial part, the market's fallen back. You know, when we were rallying up here, if you'll recall me saying, I don't understand this rally that we're going because the industrial numbers we were getting, especially back here, were not good. And yet the market kept rallying. I said, they must know something I don't know from the fundamentals. The chart action is just plain bearish, but this is a short covering number, not a buy number. This is where I think the pros now begin their short covering and began it actually last week in hitting the Bollinger Band. That's the first time you hit a Bollinger Band since all the way back here in August of last year. So I do think that's a short cover area. In XLE, still bearish. And this sort of fits in, unfortunately, with Devon and others, but this is the energy sector as a whole. If you can take out last week's high, I will change my opinion very quickly. Until that's done, you're right now fighting a battle for direction between the green line, the 100-week average, and the 18, trend down, bias down, momentum sort of flat right here. In the dollar index, I think it's getting too stretched out to the downside. That does not mean I'm bullish in any manner. You've gotten your first move last week, not this week, under the 100-week average. The market, if we look at the slow stochastics, both numbers finished under 20 this past week. They were both under 20 last week. A week before is the big key, and it didn't happen. So markets typically, especially dollar, doesn't like to embed to the downside. If it has another down week, that's very bearish. My guess is, it's purely a guess, going to try to fight to get back to the green line, the 100-week average of closes. It's only 40 cents away. Is it enough to keep it from embedding? I don't know. When we look at GLD, I woke up this morning and I'm listening to the news, and this was about 7:30 in the morning Central Time. And here we are, I forgot if it was NBC or CBS, and they have their gold expert, and gold's $3,000. People all over the world buying it. The good news is the lady was bright, and she said, you know, this is a very volatile time. Gold often hits highs, and then when the corrections come, if you're not in it for the long time, it scares the heck out of people and they start dumping. You got to be careful. I think she's right on that. I am in the bull camp. I don't know how high I think it's going, but I think it's very dangerous to not be bullish in front of the tariffs. And then as the tariffs approach, you've got to really weigh, did the market build in all the bad news? And that's why people are buying gold and the money starts coming out. It may not wait for the tariffs. It might do it just beforehand. But until you lose this bullish embedded reading on the breaks, I continue to see the pros buying. When the red line closes under 79, I think you walk away at that point. In the copper market, this is again about China. It's again about their plan for internal consumption. They want people to buy homes. They want people to buy new appliances. They want all those things that use copper. And that's what this market is rallying on. Do I think it's trending yet? I don't. I think you simply have the higher high, lower low. I should have had that arrow over there. I don't know how it got like that. But that's pretty much what I'm saying. Now, the other thing you might want to take a look at is my morning subscriber videos. Now, it's in these videos that I do a lot of talking about what I think the market's going to do. And they will look like you just saw me running that. It's every morning. We're going to talk about fundamental and technical analysis. The charts will look this way. They'll be jet black with all the studies I use. There's 5 of them. Each of the videos is 40 charts plus. So it'll be stocks, spiders, ETFs. It'll be all major futures markets. Access to my special reports, which I'll be putting one out this week. I'll decide what it is probably tonight or tomorrow and then begin recording by Tuesday. Specific trade recommendations, and I keep up with the trade recommendations in the videos. How do you get it? Just go to iraepstein.com under the word research, and away you go. That's where you sign up for all those, and you'll be able to see exactly what I do. I'm Ira. You have yourself a great weekend, what's left of it, and I'll catch up with you all first thing in the morning on Monday. Take care.